Welcome back to Pete's Investing Updates. We review the weekly progress of some sample blue chip stocks from Australia, the US and Europe. And these are updated every weekend from the week's progress. This week's summary, we look at stocks are down or flat across the board with the exception of BHP and Johnson Johnson. If you want me to review a share price, please provide a comment and I'll cover it in a future video. As always, click on the subscribe button, the notification bell, and like this video to support the channel. But first, let's go through the playlist where you can look in some more deep dive knowledge in terms of some background information and how we read the charts. We review the indexes around the world of some sample indexes every week, as well as the blue chip share review, which is this video here. And that's where we keep all our respective videos. In the strategy playlist, that's where we look at the strategies we follow in terms of the average down process, a simple trading strategy using the CCI indicator. And we also discuss some money management ideas. So first, let's go to the data table and showing what sort of returns we've made so far over the last 17 months. And again, we're looking at a rolling 17-month horizon in this backtesting on a 15-minute time chart for these respective companies. What I've done here is also show the dividend yields taken from Yahoo Finance, and also the ex-dividend dates of those payments. And again, our strategy requires that if primarily if we don't make a profit on, or if the sale is not happening straight away in terms of our buy-sell strategy, the simple trading strategy, we're getting some sort of dividends if we're holding on to those over a number of weeks or even months. And this shows the respective returns on buying it and not selling it. In other words, buy and hold the stock and stick it in your bottom drawer. But you can see there the returns for the buy and sell strategy versus the overall returns on the buy and hold. And these are the drawdown requirements for each of those. That just shows where from the highest high to the lowest low in terms of profitability, what drawdown has been taken up by those respective shares. And that's just showing out an estimated monthly revenue over the 17-month horizon. So if you look at that for the first one for Commonwealth Bank of Australia, for example, let me show you the 17-month horizon. You can see here, this is our buy and sell profitability, and this is our buy and hold profitability. You can see there we bought the same number of shares back here. And again, this is a 17-month time snapshot. So if we bought, in this case, the number of shares back there, we're trading $2,000 lots of shares in both scenarios. And this is where we ended up today at the end of last week, or end of this week, in terms of profitability at 1,015 for the buy and sell strategy versus 422 for Commonwealth Bank. And again, we're trading on a 15-minute time chart. This is our price chart, and this shows the number of contracts or shares held. And this little step here shows we averaged down according to our average down strategy, where it's just one step. That just means we bought here, we sold there. So in this case here, we bought there $2,000 worth of shares, and back here we averaged down, bought a lot of $2,000 shares. So we kept $4,000 of shares up until that point, until we sold out there at a profit. And all the rest of those were single trade, single entry trades. This shows our CCI indicator down here, and this shows the average of the last 90 days, which helps calculate where we enter in and re-enter in the average down process. And what we look at in terms of profitability, we want to make sure when we exit the trade, such as in this example here, we exit and make sure that we're returning a profit. And that's what's saying here. The overall average of the highs and lows of the last 90 days is $1.50. So we're looking at least $1.50 on top of the share price where we bought it in terms of return, so we don't sell at a loss. So if you look at that in the previous week's progress, let's zoom in to the July 5th, which shows you back here. That's on the Monday where the week opened for the Commonwealth Bank of Australia. You can see there it went pretty much flat. The MA 200 line was pretty much flat, then it dropped below that. So and this little indicator here shows where that spike happens. That's where potentially we could have bought more shares if we weren't in the trade already. So if you want to trade that, for example, this past week, you could have bought X number of dollars worth of shares of the Commonwealth Bank there, and then held on to them. Now in this case, we bought $2,000 worth of shares back here. That was our indicator showing in there. The CCI 100 broke above the zero. So we bought shares there, and we've been holding on to those since, and that's what that flat step indicates. Now we haven't averaged down anymore, even though the CCI fell below the zero, then broke above the zero again. We haven't added any more shares to this because it hasn't fallen enough to average down. We want to make sure that when we average down and buy more shares, such as this example, or this is probably a better example here, we bought initial 30 shares or 29.87 shares there. And we bought another 33.9 or 34 shares there to average down. So in other words, we want to drop enough. We don't want to enter in too many times. So in other words, as in this example here, we want to make sure we fall down, drop in price enough to enter in an average down indicator. So again, refer to our simple trading strategy video, which is in our playlist for a detailed explanation of how the average down process works. Next, we look at BHP Australia. This is one of the two shares that actually gained for the week. So again, opening up back here on Monday, it bounced off our MA200, and we're not using the MA200 for trading at this point. Just simply using it as a momentum indicator. It's bounced off that and it's kept going upwards. So that's one of the positives of this week's trades. Next, we look at Volkswagen, one of our European shares. So again, this has been held now since the 14th of June, where we entered 7 shares. We bought 7 shares, which is $2,000 worth. The price declined. It actually fell below our average down criteria. The CCI had broken above the zero as well, which is our second criteria for entry. We bought another 7 shares there, so we've got now a total of, you can see there, just under. Wait, this is just showing the decimals as well, but we bought about 14 shares total, and that's still open. So that's moving in our direction. But if you can see that the profitability, it's currently sitting at 18.91, whereas back here where we opened the trade, we were 19.97. So we're about $100 down on where we should be in terms of profitability, but that's because we haven't closed out yet. Next, we'll look at Telefonica, the other European share. Now this too has dropped below our MA200, and we're still holding on to that. And we've only got one set of shares, which we bought back here. We bought 500 shares. And that's still below our profitability. So we haven't averaged down yet, although it's coming up to a CCI 100 level here, breaking above the zero. So we'll see what it does. But in essence, what it's saying is at this point, if you look down here on this dotted line, approximately 0.068, we want to see that the price drop at least 2 times that from our opening, and also make sure that our CCI 100 breaks above the zero to buy any more shares. So we'll see what the program does in the coming days if that remains open. Next, we'll look at JPMorgan, one of our US shares. Again, we bought our first lot of shares. Actually, we closed out here during the week. You can see there where we opened up there, we bought 13 shares. We closed out there. So our returns there, if you look at that red line there, it shows a profitability of 100. Our baseline is 100,000, so 760. We started from our profitability level there at 727. So we made about $40 odd in terms of profit on that one. So again, we want to make sure we return a decent profit before we close out. And here, very late on Friday or Saturday trade, Saturday being Melbourne time, Australia, which is where we're based, we bought another 12 or 13 shares here, and it's still rising in comparable to where we opened. So that's a good positive sign, and see where that goes. Although the CCI is starting to turn down, we'll keep an eye on that in the coming days. Then Johnson Johnson, that's been doing quite well for the week. Again, opening up back here, where we are there. Open up there, went sideways for a while, but it kept gradually rising. So that's a positive in terms of where we opened up. But that's been holding on now for a number of weeks. We opened up back there just under 12 shares, let's call it. And again, this is a programming rounding, and it's still sitting at 329 where we first opened up. Our profitability at 332, so we're just a couple of dollars down. So if that breaks above that resistance line or support line, that will maybe look at closing it out with a minor profit. Lastly, we'll look at Caterpillar. There's a bit of a topsy-turvy ride on Caterpillar, but again, you can see here for the week it's been going sideways. We averaged down on this one. After opening up back here on the 15th of May, we bought, what's that, about eight shares. We averaged down here because it fell below our first criteria in terms of the gap, and we added another 9 shares there. So now we've got a total of 17.5 or 18 shares in Caterpillar. But that's still open and we're still trading on that one. If you look at the longer term picture on Caterpillar, it actually come back to that support line there and bouncing in between that little channel there. So I'll keep an eye on that and see how it performs. Let's go back to our profitability table. So you can see here for the buy and sell strategy, we've reaped about $6,800 for the 15 months for the buy and sell strategy, and the buy and hold, which means you haven't sold any shares, about 5,000. Again, it's a combination of Aussie dollars, US dollars, and euro. So that's just let's call it a dollar amount, but you can that's dependent on your currency exchange. We've done about 6,800 versus 5,000. And that turns out to be about just over $400, which is calculated that amount divided by 17 month approximately. So it's an average return per month. Okay, everyone, don't forget to hit the subscribe button, the notification bell, and like the video, and I'll speak to you in next week's review. Thank you.